Are you a small business owner? Do you understand the upcoming tax changes that are going to happen in 2019? Well, the reality is, if you have a successful small business and you've been retaining earnings in your corporation over either your holdco or your prof corp over the years, and you have those retained earnings invested in some stock and bond portfolio, or maybe you're invested in real estate and you're getting some returns off there, what's happening now is the federal government, and this was announced a year and a half ago, the federal government is now going to claw back your small business tax rate. So instead of paying 12% on your first $500,000 of revenue, you're going to pay up to 27%. So this is not an increase of 3 or 4% on 12%. This is a 120% increase on 12%. On your first $500,000 of revenue, instead of paying $60,000, you're now going to pay $135,000 worth of corporate tax. Are you even aware of this? And more importantly, are you planning for it? Because there are strategies that a good tax planner can help you with to either shelter these assets in your corporation so they're immune to the clawback, or the second situation is help you take these assets out of your corporation in a tax neutral manner. So at Precedence Private Wealth, we help our small business clients make a huge change in their overall wealth by doing two things. There's strategies where you can retain earnings in your corporation but shelter them from this small business clawback so that you don't have to pay an increased corporate tax rate when this change happens next year. The second strategy, rather than shelter assets, is another strategy is to try and get assets out of your corporation tax-free. And we can easily do that, but it takes a little bit of planning. We can flow assets from your corporate account to your tax-free savings account in a tax-neutral way because we can create tax deductions to offset the income tax that you will pay to remove that money from your corporation. The trick is, are you paying attention? Do you want to pay an extra $75,000 to corporate tax next year? Would you rather have a situation where you can flow money into your tax-free savings account in a neutral way so you can use it in your retirement and not pay tax on it, or when you die, you can give it to your kids? There's solutions out there, but get moving, we can help.